How much fear factor is in the market? Let's ask Anna Rathbun of Grenadilla Advisory. Anna, all three of Wall Street's main stock indexes are set for weekly losses despite any Friday gains. What do you see as the biggest market forces right now?
Nvidia is the name to blame this week. There was a lot of anticipation around Nvidia's earnings, which came out on Wednesday. And the fear really wasn't around whether or not it would beat earnings expectations. It was really around the guidance. And frankly, the guidance was really spectacular. But the valuations are still high. Investors are still scared. It didn't matter what Nvidia did. It was going to go down. So that's what we're seeing this week is a lot of trading around Nvidia. And at the end of the week, what we're seeing is some Fed speak, some Fed officials coming out and talking about whether or not they're hawkish or dovish, and a lot of moving parts in the markets. But I still think that the week we're going to end down.
Bitcoin had a meltdown this week, dropping to a 7-month low. Do you see this as an ominous sign for stocks and other risk assets?
I see Bitcoin as sort of raw emotion or raw sentiment with regards to the markets. It doesn't have intrinsic value, so it really is just pure sentiment. And there has been a lot of things to worry about. We started the year with some tariff, and we frankly don't even know, frankly, how tariffs will actually impact the economy. And then there are, of course, valuation fears, et cetera. So Bitcoin selling off is really a gauge of where investor sentiment is. It could certainly spill over into the stock market and other risky assets. But frankly, other assets are actually impacted by things like interest rates and Federal Reserve, whereas the Fed can't really save Bitcoin, right? So I would view that as a lot of fear in the markets, but not necessarily 100% predictive of what the rest of the financial markets will do.
Given what we saw with Nvidia's stock this week, do you think that the market is due for a broader pullback?
When investors decide to sell, sometimes that momentum is very difficult to stop. And I think that's what we've seen. The buyers are sort of coming in, but not decisively. So when you see that happening, the momentum can certainly build, especially at high valuations. I would not be surprised to see a correction heading into the year. And if we don't at the beginning of the year, that would not be surprising to most investors.
Consumer sentiment is low. When you look at third quarter earnings, especially companies' outlooks, what's your take on the state of the consumer as we head into the all-important holiday season?
Everyone is worried about prices, affordability, and that includes not just, clothes and things that we would like to buy, but also food and housing as well. Everything is expensive, and that's what's reflected in the almost record low University of Michigan Consumer Sentiment Index that came out today, finalized. And we're also hearing that from earnings reports. So this week was very big with retailers, including Walmart, Target, Ross, which is a discount store, as well as Gap. And what we're hearing, if we actually sift through some of the details, is that consumers are still looking for value. And a lot of higher earning spenders are actually coming into Walmart to buy apparently Chanel handbags second hand through Walmart. I've never heard that, and I also didn't expect that to happen. But so we're seeing some dislocation in the markets where if we sift through the details, we see consumers that are looking to not pay as much, looking to stretch their dollars because the pain is being felt in their wallets. And we're also seeing that in the sentiment index as well.
You mentioned that we had some dovish comments today from some Fed officials that cheered investors. Traders are now pricing in about a 70% chance of a December rate cut. When you parse the economic data that we did get, what's your take? Do you think that a rate cut is warranted?
I would be an advocate for a cut simply because the high rates have been very, very punishing for people who do need to borrow and for small businesses that do need to borrow. Having said that, what the Fed will actually do is very different. So the data that we've seen some reasons for a cut and reasons against a cut. Reasons for a cut would include the softening labor market. The labor market is actually frozen, and we've heard of a lot of corporations doing layoffs, and the unemployment rate did tick up. right, to 4.4%, heading toward 4.5. Uh, Cases against cutting would be wage growth. Wage growth came in at 3.8%. That is some of the delayed data that we're getting. And the Fed watches that very, very closely for any potential spiraling of inflation. And lastly, we don't know what the tariffs will do. We don't know the full impact on it. So I think it's a coin toss. And frankly, the market's going from something like 40% of a December cut to 70%. That just tells you that the traders betting is also volatile. And frankly, I do think that it's a coin toss, but I do think they need to cut.